What's going on, YouTube? This is Dave's Daily Trades, where we cover daily AMC technical analysis, price predictions, and of course, bring you the latest and greatest news. In today's video, we have a lot to cover. We're going to first start off the video with the technical analysis, going over the great day that we had for AMC and look at what we have for the days and weeks to come. We're going to be going over the meme stock report that was just released just about an hour ago, giving you my thoughts, opinions, and what the SEC really missed in this report. We're also going to be taking a look at UnusualWhales, my favorite tool right now for analyzing options data. There were some ginormous prints and some really bullish information I have to share with you guys. And then lastly, we're going to be looking at the battle of SEC versus Citadel, what to expect, and what exactly is going on. But without further ado, we're going to jump into the intro and then hop right into the technical analysis. And we're back. All right, guys, a great day. As you all know, we were up 5.62% during normal trading hours, and after hours right now we're slightly up, but as you can see here, mostly flat. Right now in after hours we're up 0.07%, but the greatest thing is seeing that we're holding this level and we're not having a repeat as Friday. But as always, guys, take after hours with a grain of salt, because on Friday we saw it was like a 2.5% decline, which a lot of people were like, what the hell's going on? But of course, we bounced back right away during pre-market this morning and led to a very nice run-up. So we're going to break down exactly what I was looking at today. So the biggest thing, as I said on Thursday and Friday's video, we did have this gap fill over here from just about 44 and change to just about $43. We were briefly in this area right around 11.45 today, but really bounced off this line as resistance. But it is very close to our 38.2 retracement level on the Fibonacci retracement at $43.45, and this is now acting as our support range like we did expect. Now, the great things I do want to point out for today is right in pre-market, we did retest this area right here, the 50% retracement at $40.60. Once we had literally just 2 minutes, and look at how perfect this bounces right here. We had 2 minutes, bounced right up, consolidated around this area of $41.31, which was the high going back to Friday, or right around a really good consolidation area on Friday, excuse me, and then went right up to this level, that 38.2 at the $43.45 level, and really bounced around this area all freaking day. Now, the great thing is I love to see the consolidation after a 5% run. That's always good to see, because we don't want the stock to fall right back down like we have seen in the past. Now, what I do have drawn here is a wedge-shaped pattern starting down here at right around $42.25, all the way to the high of the day at $43.63. Now, we did very nicely respect this channel throughout the, I would say, 2/3 of the trading day today, and now expectations leading into tomorrow is I really want to see us get into this range right here, right from 44.25 all the way to 43.33, and I really want to see us acting as support at that $43.45 level. That would be absolutely key in our next leg up to all-time highs. So of course, we're going to see what happens tomorrow, but I really think we break out of this wedge-shaped pattern, and we're going to jump into exactly why that is the case. Now, looking here at AMC, I have been really using this chart quite a bit, and for very good reasons. Now, on the left-hand side, we do have from 413 all the way to that June 2nd run-up. And on the right-hand side here, if we zoom out a little bit, we have from our recent low at $28.50 all the way to our recent high of $52.79, and that's our Fibonacci retracement. Now, where I'm placing us is right here. So this area at just about $36 that we were really floating around and flirting with for quite some time was the floor equivalent to the old $9.14. since we are starting that next leg up, we are now over here somewhere around the beginning of May, and I'll even say like middle of May, so we'll say like May 10th, somewhere around that time frame. But that, my friend, is irrelevant. Now, the big thing that I'm seeing here on this chart, zoomed in a little too much, is we have a lot of these wedge-shaped patterns where we have a nice run up, a little bit of consolidation or downward pressure, and then we have that diamond-shaped form, we have our next leg up. Same thing every single day until we start that massive breakout candle. Now, what are we getting on AMC right now? Something very similar, where we had this consolidation on Friday, wedge-shaped pattern, move up. We have another wedge-shaped pattern moving here. My predictions is, yes, tomorrow we continue this, we move up and consolidate around this area above $43.45. That is really my goal. And that is really what's going to lead us to those boom, boom, breakout freaking candles, my friend. So that is what I'm looking for in the days ahead. Of course, guys, tune in daily because we are going to be looking at the charts, going over price predictions, and, of course, going over any relevant news articles. Now, I do want to jump over to UnusualWhales to analyze the options flow. And really the big things that caught my eyes right off the bat were these giant call options here. For instance, we do have this premium sitting at $10.1 million and another premium sitting at $1.6 million. So this one came in today. It looks like we have the expiration for 12/17/21, which is a very popular expiration date for options data with AMC. That and, of course, January 2022 are the two biggest option points that I'm seeing right now. So what we have to start off here is a selling of put at a strike price of $60, and that is not what I want to do. So we sold that put, which of course is extremely bullish, guys. They're getting out of that right now because they probably know the floor has been in and AMC is about to rip. That is my personal predictions from this. Now, looking over here, we have another call on a $60 strike for the same expiration. And man, I'm going click happy right now and messing up my my conversation here. Sorry about that, guys. But anyways, for the same expiration, we're buying calls at $60 strike. And look at this, $1.6 million on the line here. So really great things for AMC. And the big whales out there are extremely bullish and taking very bullish bets. Why is that? Well, simple. Look at this technical setup we have here. Just in the past couple of days, we'll say from 10/13, we have gone from $36 all the way to $43. That is some very nice price action. Of course, these whales want to get in on the fun, just like we're having. Absolutely great stuff, guys. And that's really all we want to cover on the options data for now. Total open interest, last thing here. On the call side, 1.4 million, and on the put side, 1 million. Total open interest of 2.4 million. And if you guys do remember from the last video, this has gone up just about 300,000 in volume here, or open interest. So that's always great to see. Of course, bulls outweighing the bears, another great thing. But of course, we'll keep an eye on this, and I will let you know any updates to this options data. Anyways, guys, I want to hop right into the battle of the century right here. Citadel Securities burst the SEC live on pay-per-view. Now, I'm just kidding. It's not live on pay-per-view. I just wanted to say that. Anyways, what's going on? Well, Citadel Securities is fighting what's called the D-limit order that will protect retail investors against market arbitrage in court on Monday, October 25th. So if we look at the calendar over here, that is next Monday. 7 days away, the battle of the century. Absolutely pumped about this. So I just want to jump into this article right here and read this quote right here as to why Citadel is actually suing the SEC. I think this is freaking hilarious. So this is in quotation marks there from Citadel Securities, and this is what it says. The SEC failed to properly consider the costs and burdens imposed by the proposal that will undermine the reliability of our markets and harm tens of millions of retail investors. This is the funniest thing right here. Harm tens of millions of retail investors. Well, how the hell does Citadel know it's going to harm retail investors if they're not retail investors? Like, come on now. That's absolutely bullshit. The judge in this court case should laugh in their face, tell them hell no, and move on with the day because there's so much more litigation that can actually be going on right now. So anyways, I do have a little bit of notes that I do want to read here. First of all, the delimit order is removing the market arbitrage. Arbitrage, I typically like to think about this in the most basic, simple terms, is almost guaranteed profits. And I'll give you a quick example of this. So let's say you place an order tomorrow for buying AMC exactly at $50. Now what happens is that order gets sent to someone like Citadel Securities, but what they're going to do is they're going to take it and say, you know what, we're going to take your $50 here, but we're going to actually give you these shares or execute these shares at a price of $49.50. So on that trade, they're actually making, if we're just talking about one contract, 50 cents here. Or they alternatively just sell you some shares that they already have and they bought at a cheaper price. And that is exactly what the market arbitrage truly is. So you talk about this in large scale. Now they're executing roughly, I forget exactly what they're doing, but let's just call it 80%. Now 80% of retail volume coming in, and they're making, just a rough estimate here, 50 cents a trade. That's a shit ton of money. Now, I do want to take a step deeper of this, of why Citadel could be suing the SEC and what's their actual reasons behind going through this court case right here. Well, the big thing is the delimit order removes them making money on placing these orders. So now we're removing a line of revenue that Citadel has. Of course, we do know that they are deep into these positions, and they're not making money. They're actually losing shit tons of money. And to maintain that margin account, they need some type of revenue coming in. So if we remove their arbitrage in the market here by this new delimit order, well, guess what's going to happen? They're literally not going to have enough money coming into the pipeline to make sure that they can pay these margin calls right here, or make sure they're not margin called. I'm sorry about that. A little out of it today, guys. So that means trouble for Citadel Securities. So hell yeah, they're absolutely going to fight this. They're going to absolutely try to make sure that this doesn't get passed, because this is a huge line of revenue for them. And without it, who knows if they're going to be able to make their margin accounts right here. Now, lastly, I do want to just go over Dave Lawyer's post and his point of view on the meme stock report that was just delayed. I have had a chance to skim through this, and I do have to say, it pretty much just focuses on GameStop the entire case and doesn't really say any other meme stocks or quote-unquote meme stocks were even involved in this. But disappointed because they missed out on so much that's going on that us as retail sees, but it's like they're really turning a blind eye against all of this, and that pisses me off. It really does. But anyways, from the SEC report on GameStop, this is a crazy statistic. It seems pretty unreasonable to have short interest to be higher than the float, and GME was exceptional, according to the SEC, which is complete bullshit. GameStop had this short interest of over 100%. It says it hit a high of 109.26% on December 31st. Absolute bullshit. Way higher. Talk about AMC, talk about BlackBerry, talk about all the other various stocks out there. So we're just going to read this little section right here. Few stocks, if any, have short interest greater than 50% on a given date. Until recently, short interest of more than 90% was observed only a few times. And interesting enough, this happened back in 2007 and in 2008, exactly when we had the market crisis, where you exactly know what happens. I hope I don't have to explain this. But when examining short interest as percent of shares outstanding, GME, GameStop, is only stock that staff observed of having short interest of more than shares outstanding in January 2021. Guys, we know it's bullshit. You can hide a lot of information if you can manipulate the data that people are observing here. And that's exactly what happened. The other thing, there was another quote in this, and it pretty much said that short covering was not the cause for the January mania. So, for instance, our case stands. Shorts never covered in January. They could have covered when AMC was at $5, and they absolutely never did. The reason for the quote-unquote mania that happened in January was because of the influx of all these margin calls. So, it looks like, and from my perspective, they shut off this buy button so that certain funds, we're not going to have to name them here, could put up the margin for their accounts so they wouldn't go belly up and send GameStop and AMC to the freaking moon. What they completely missed and had no idea about was retail was going to get together, teach each other, inform each other, come to conclusions, write DD, and stay faithful for 9 freaking months until those shorts cover their positions. That's why I'm here today. That's absolutely why I'm not leaving. And I'm not freaking selling this shit until all of this stuff blows up in the face of all of these corrupt market makers out there. You can call me greedy, you can call me whatever you want, but this is truly fighting for justice, fighting for an equal marketplace between market makers and retail investors. And this is exactly what needs to change. And guys, us yelling at them, us buying this, us holding it, us coming together as a community and putting up our savings and our paychecks every single week to fight for this just shows that they're not going to win this. There's no freaking way that they come out on top because they are not retail. They haven't worked some shitty job for months on end and years on end waiting for a 3% raise at the end of the year for an ungrateful boss. They haven't gone through this stuff like we have. We truly know what it is to be on that other side, and we're going to fight every freaking day until this shit changes and until AMC is at a price that is going to be life-changing for all of us. And sorry for that rant, guys. This shit just really bothers me, and I want something to be done for this. But anyways, hope you enjoyed the video. Be sure to hit that like button, subscribe for more content. Peace out, and tune in for the next one.